Welcome, ladies and gentlemen, to the Swiss Resource Capital Virtual Roadshow. After the summer break, it's my honor and pleasure, to really get started and restarted here. And our company today is LI Metal, and the CEO, Maciej Jastrzebski, is with us. Maciej, good morning. How are you?
Excellent. Thank you, Johan. Pleasure to be here.
Thanks, and great to have you here. Before we get started, let me see that people can check in here. Yeah, well, that's working. Perfect. First of all, my name is Jochen Steiger. I think most of you know me. I'm the CEO and founder of Swiss Resource Capital AG, resided here in Herisau in Switzerland, and also the chief editor and founder of Commodity-TV and Rohstoff-TV. And it's my honor and pleasure to moderate this session here today with Maciej and all the guys which are attending here, all investors attending here today. First of all, nobody can see each other, also no names, no emails. That is really important because we are fully complying to the European and Swiss data security law. And of course, we are recording this session and it will be available on replay by email, which is going automatically to you, and also tomorrow at Commodity-TV. LI Metal is a really interesting company. I mean, we all know lithium is hot, and we all know a lot of exploration development companies, but also lithium producers. But this is really different because this company is using lithium. Let's make it a little bit easy for me to displace it like this. And is developing for the next generation of batteries a new lithium anode technology, but also a lot of other things around a new battery technology. And Maciej will give us the insight in a second here. So let me bring up the presentation. Voila, here we are. And I would say, Maciej, the floor is yours. One thing, we will have approximately 20-25 minutes of presentation, and afterwards it would be great if you place all your questions in the chat function or in the Q&A chat function so that we can have a lively discussion. Thanks, and please enjoy the show. Maciej, please.
Thank you, Johan. Really good introduction there, and thank you to everyone who's joining us today. So as Johan mentioned, my name is Maciej Jastrzebski. I'm the co-founder of LI Metal and its CEO. I'll skip the disclaimer. I'm sure everybody's familiar with the disclaimer. Just as an overview, what LI Metal does, and as Johan mentioned, we're not a resource company per se. We're not a mining company. What we're doing is developing and commercializing technologies for next generation batteries, and specifically what we're working on are technologies for the production of lithium metal, and then the transformation of that lithium metal into anode materials for really the successor technologies to lithium-ion batteries. We've been working pretty much 4 years now, not quite, but just about 4 years now, starting with a focus on metal and eventually relatively quickly incorporating the development of anode technologies to make use of that metal. We started trading as a public company in November of last year. So again, sort of coming up on the 1 year mark there. We raised about $32 million as part of that transaction, which has really accelerated a lot of our activities, our development activities and commercialization activities. We've had a very busy year this year, and I'll talk to some of that, but you can see some of the items there. So again, just to help orient everyone, next generation batteries are a pretty broad group of technologies that are rapidly maturing and approaching commercialization. In some cases are in early stage commercialization. These are the successor technologies to lithium-ion batteries, meaning they're similar in character but much higher performance. Both in terms of the amount of energy that they store for a given mass or volume of battery, but also in many cases the developments that enable that higher energy storage also increases the safety characteristics or eliminates some of the common causes of safety issues with batteries like fire. So when I talk about next generation batteries, it's really it's solid state batteries, it's hybrid lithium metal batteries, it's lithium sulfur batteries, really any of those technologies, even silicon anode based batteries. And what they generally have in common is that the way they get their improved performance is by substituting the anode material for, which is in a lithium-ion battery, is a graphite material, for a high-energy anode material like lithium metal or silicon. And what that ultimately translates into for the end user is longer range in a car, more efficient electric vehicles. It starts to unlock other niche applications, or what are currently niche applications, but eventually become widespread applications in electric air mobility as well. So these are step change platform technologies that enable huge improvements in the electrification field, and they're really based around the anode material, and the anode material is and production of the anode material is the technology that we are working on. Now, if you've been interested in the EV space or the electrification space, I'm sure you've seen a graph that looks similar to this. And basically, we know that the lithium battery industry, or the battery industry, has to grow by a factor of 4 or 5 by the end of the decade from where it is today. In some cases, some projections are pointing to even greater rates of growth. But what's important to understand is that as we get into the latter half of this decade, more and more of that production capacity gets built as next generation batteries, because they just offer so many performance improvements. In many cases, they offer cost improvements, and so it's very difficult to see how future capacity gets built on legacy technology. So it's very important when you look at these graphs to understand that, yes, this is battery demand, but it's not batteries the way we think about batteries today. We know this because a lot of the major automakers, pretty much most of the major automakers, have made some commitment to relatively in short order start to produce vehicles based on next generation batteries. Obviously, it's not going to be a wholesale conversion of their entire product line immediately, but we're starting to see those dates coming closer, and we're starting to see a lot more activity. We're fortunate because we have a very sort of inside look. We deal with a lot of the suppliers to these companies. We deal with a lot of the battery developers who are working to commercialize the technologies with these auto companies, and the plans are becoming very concrete. We're seeing specific demands for product qualification materials starting to come in, and that's very exciting to us as we advance what we're doing. And of course, not to understate this, but all of this extra demand, which based on our own internal estimates and based on the industry estimates that are available, we're looking at probably on the order of 200-300 gigawatt hours of next generation battery production per year by at the end of the decade, and that translates to also a significant increase in the demand for metallic lithium, which is the other material that we're going to be producing. So I'll talk a little bit about the actual. That's kind of the overview of the industry, but I'll talk more specifically about the technological areas that we're working in. So the way metallic lithium anode materials, high energy anode materials, are produced today is a foil rolling process. And the issue with foil rolling is that it's not particularly well suited to producing very thin foils out of weak materials. And so there's a lot of trade-offs, technical trade-offs that are made in order to produce these foils for next generation batteries. It's really adapting a technology that's not well suited for producing this particular material. And that has implications on the cost. Generally, what ends up happening is people produce really narrow foils that are a lot thicker than what you would want to have inside a next generation battery. And so that means you're putting in more lithium, which is now running $450 a kilogram. You're putting in more material in the battery. So rather than taking material out, which is how you improve its performance, you're putting in excess material. And lithium, being a reactive metal, obviously kind of claws away at some of the safety benefits. Even if you can solve that problem, you still have the problem of where do you actually get the metal to feed this demand, these 200, 300 gigawatt hours by the end of the decade. most of the metal in the world today is produced in China. It's all produced using what I would call a legacy process. So it uses lithium chloride as the feed input material. It's a relatively niche chemical. It's not widely available, and it produces a lot of chlorine gas, which is a toxic, poisonous gas, very highly corrosive as well to equipment. It produces a ratio of about 5 tons of chlorine gas to 1 ton of lithium. So just when you think about that as a scaling problem and of installing capacity in North America and Europe, that just it has an upstream supply chain problem because you don't have the feed-in material. You're working with a niche chemical, and it's also got a pretty heavy environmental burden, which also makes installation of that capacity quite difficult in these more regulated markets. So what we've done is really transformed that process. So we've developed a process that uses lithium carbonate as the feed input material. Lithium carbonate is the most widely available lithium salt. It is actually what's used in the vast majority or a very high proportion of lithium-ion batteries. So that allows us to take material from the existing lithium-ion battery supply chain and basically feed it into our process. The process, because it's using lithium carbonate rather than chloride, is not releasing chlorine gas, and that has implications in terms of the cost of production. Now, this is a proprietary technology. It's one that we're continuing.
Maciej, sorry, 1 second. Do you have the window open? Because that's really hefty, the guy with the horn.
Yeah, no, I don't, but you're right. I'm not sure. It's something out in the street. Apologies.
Yep. Is there a chance that you can shoot him, or I don't know?
No.
Okay, let's move on. No problem.
No, I'll hopefully he'll calm down. Okay. But anyway, sorry. So some of you may have seen the news release from this morning. So this is an area like we've done a lot of development at the bench scale. We've kicked off piloting activities. We have a fairly methodical piloting program that we're following. Most of the process work was done at the bench scale. So a lot of piloting work that we're doing now is really focused on the equipment longevity, and getting to that point. Our goal is to basically have demonstrated continuous lithium metal production from our equipment by the end of this year, and that program is proceeding. What you may have seen today is the news release on kicking off some study work, engineering studies for a commercial scale plant. We're pursuing that in parallel with the ongoing piloting activities, of course, with the goal of as soon as we're able to be ready to produce or to build that commercial scale plant. And again, because we know that although the real large uptick in lithium metal demand from next generation batteries is several years away, there's a conventional market in North America that needs to be fed. We've had lots of conversations with many groups, and they're all keen to have local lithium metal production in North America rather than having to supplement the existing production capacity with imported lithium from overseas. So it's an area where one of the great strengths of the company I've always felt is that we have a very strong future focus with the anode development and production of lithium metal to feed that anode demand. There's also an opportunity to feed into this basically existing market today. So that's some exciting developments around that. Of course, we also have the lithium metal anode technology, which is the other focus of the company. So this is really a process that aims to eliminate foils as an anode material because of the known sort of issues with scaling foils and the known issues with the cost of foils. What we're really doing here is we're adapting a technology that's been proven over many years of production of packaging materials for low-cost packaging materials. Basically, if you've opened a bag of chips or a chocolate bar, you'll often have a plastic film that looks metallic. It's in principle a very similar technology that we're developing and commercializing. It has dramatically better production characteristics. You can make materials that are much wider, much thinner, basically starting almost at zero thickness. So it's very, very attractive for the battery industry, where you're trying to use absolutely the minimum amount of metallic lithium on that high energy density anode as you can. The nice thing about the technology, and an area that we've done a lot of work in over the last year, is in you can produce a simple product, which is a substrate with lithium metal that's deposited on either side, and that's our first sort of go-to-market product, and we're working on that to bring that to the point where it's where the market is commercially ready, and where the product is ready to an automotive standard. It can be just plugged into whatever battery comes along. But the great thing about the technology is also that it's tremendously flexible, and most of the cost you've incurred by the time you've gotten the material into the equipment. So there's a great breadth of technological flexibility there to change the characteristics of the materials. And over the last year or so, we've expanded our product development capability. We've commissioned an advanced anode materials lab. We've built a team to basically to do product development. And so now we're starting to get really quite promising results with some of the next generation sort of follow-on anode materials that we're developing. And as soon as those have been, let's say, industrialized to the extent that we're producing them in our pilot line, we'll start to share those results with the market as well, because I think it could potentially be very exciting. Our overall strategy, because that's important, how do you tackle this emerging market? Is we've been setting up the company to do this, is to first entrench the technology in these emerging batteries, and then grow with the developers as they commercialize their products. And the reason that's important is because the main target market is the electric vehicle market. There's a qualification process that has to be followed. It's fairly rigorous, because an entire automotive product line depends on the suitability of these batteries and the industrial production of these batteries. And so what we're doing is we're piggybacking our product qualification on top of the battery developers. That's the strategy. And so what we've done is we've set the company up since the beginning of the year. We've had our own production of these materials. Our order book for anode materials is now running about 2 months ahead of production, and we're constantly getting new orders for sample materials. And so that part of the strategy, I think, has been very successful in developing the relationships and in advancing the development of the product. Over time, of course, we have to also be a reliable local supplier of these materials, which means we have to be able to not only produce the material locally, but also have the key inputs sourced locally. And a big part of that is actually our lithium metal strategy. So we know that there will be a supply crunch for lithium metal as the technologies take off. And so that's why we've focused so much effort on developing our own lithium metal production technology and capability. And so that goes hand in hand as a major differentiator for the company with respect to the automobile producers. And of course, as this takes off, we'll enter into strategic partnerships. We'll supply material, we'll supply technology, whatever is appropriate for the commercial model. And we've seen sort of different preferences from different groups depending on what their strategy is. So we're trying to stay relatively flexible in that domain. I guess a few notes on some of we are working very broadly with many battery companies. The most, I guess, intimate relationship we have, or the one that's led to a formal joint development and commercialization agreement, is with Blue Solutions. So Blue Solutions, and many people have not heard of Blue Solutions, although they are the largest commercial producer of all solid-state lithium metal-based batteries. They have a fairly long-standing now program with Mercedes-Benz to supply their batteries for the electric bus program, the Isotaro electric bus program. The Blue Solutions is a subsidiary of a Bolloré Group, which is a well-known European company, and this is obviously an area of focus for them to develop this capability. And what we're doing with them, they're actually one of the preeminent producers of anode materials for their own use, and they've asked us to come and help them develop a deposited anode for their EV focused battery. So we've been working now with them for a number of months. That's going well. Another part of this program that was funded via the next generation next generation manufacturing supercluster, which is a funding body in Canada, is also for reprocessing some of their waste materials to yield metallic lithium. So really, really great partnership we have with them. Great synergies in terms of the expertise they bring around lithium and we bring with our production process. So very, very exciting relationship and going very well so far. A bit more just to give you some context on our facilities. So we have two facilities. One is located just across the border in Rochester, New York. That's actually where we do our pilot anode production. So that facility is a dual-use facility. It's where we produce our sample materials. It's also where we do our first step industrialization of our more advanced materials. And as we do product improvement, it basically is tested first there. So it's a really great facility. A lot of the elements of that facility are actually full scale. So it's a relatively high output facility, smaller format anode materials, but still very useful for product testing and the earlier stages of product qualification. So that's been operational since January. We've shipped thousands of meters of material and will continue to do so. We also have the facility in Toronto, which houses both the Advanced Anode Materials Lab, where we do a lot of our cycling work and a lot of our more advanced material development. And it's also, of course, where we have our lithium metal pilot facility. So we have these two facilities. The one in Rochester is smaller and more anode focused, whereas the Toronto facility has basically the majority of the technical team, the metal piloting facility, and the R&D team. So we've got a foot on both sides of the border, which is very helpful because it allows us to move product more quickly to our customers in the US. In terms of the management team, we've got a great deal of expertise both in the battery industry with Dean and Dr. John Goodman. Dean being our Chief Commercial Officer and Dr. Goodman being our Chief Scientist, who joined us earlier this year. Myself, I have a mechanical engineering background. I spent most of my career in the metallurgical space, lots of time in technology development and commercialization. So it's an area that's very familiar to me. On the board, we have a number of individuals, again, lots of upstream experience in the lithium space. Tim Johnson, my co-founder, also the co-founder of Li-Cycle, which is a NYSE traded lithium ion battery recycler in North America. So really good team, well supported by the board and continuing to grow. We've grown a lot over the last year as we've added these capabilities. In terms of the company itself, so as I mentioned, we raised about $32 million as part of the transaction. That has funded the development of our two facilities to date. We have a strong balance sheet that's going to allow us to continue operating and advancing all of these programs as we move towards commercialization. The big, I guess I should just point out, still a very significant share ownership by the management and board, which is good. Obviously, strong alignment there and getting everything to a commercial state as soon as possible. Our big focus, especially in Toronto this year, has been to get the lithium metal production pilot line operating, and we're very keen to demonstrate that process at the current scale, which is very close to an industrial scale and will provide a really strong foundation for the build out of a commercial plant. So that's something to watch out for. We're also in the meanwhile advancing the anode commercial scale demo plant. So this would be a larger facility for producing anode materials at full scale. And given the announcement earlier today, obviously the other milestone is continuing to advance towards a commercial plant on the metal side as well. I believe that's all I've got for today, and I'm happy to handle some questions.
Okay, super. Maciej, thank you very much for great presentation. Let me stop that here. So then let me read. Okay. First question. There is what milestones do you see, or what milestones should investors be looking for within the next 12 months? Who are your major competitor or competitors we should be looking at? And if your technology is proven to be best in class, who might want to buy you? So 3 questions.
Oh, those are good questions. I won't speculate on the last one, but there's a lot of consolidation happening now, or a lot of interest in consolidation on the battery supply chain. But like I said, I won't speculate on that last point. In terms of major milestones, I think I touched on them. Obviously, I would say those are the planned milestones. We're obviously in the background always working on commercial discussions with various groups, whether those are partners or customers. So those are things also to watch for. Obviously, those are important developments for a company at our stage, and we are always working to progress those types of relationships. But the main really development milestones are, for me, the biggest one this year is the metal production. If we can get as we progress that opens up a lot of avenues in terms of developing the commercial plan. So I'm very keen. The team is working very hard, and I'm confident we're going to get there. So it's an exciting time from that perspective.
Super. And major competitors?
In terms of major competitors, there is actually starting to be a bit more. When we started the company, there wasn't a lot of this wasn't on a lot of people's radar. Over the last year or so, we've had a couple of companies start to emerge around lithium anodes. I think the most serious competitors. There's sort of 2 groups. One is the traditional sort of lithium material suppliers. Most of them are also foil suppliers, and so you can imagine that they are looking at at this future demand as a potential driver for them. So they're definitely going to be looking at this. And just the other area is equipment suppliers, PVD equipment suppliers. It's not a huge leap for them to try to get into this space, but obviously we've been working at it for quite some time, and we've been working on the anodes for a good while, starting to get build up our IP portfolio in that area as well. So I think those will be significant barriers. But basically, those are the 2 camps I would characterize as being our competitors.
Okay, super. Then what analyst coverage do you have already, if you have one, or are you planning to get research?
So we don't have analyst coverage at this stage. I have seen that we've certainly come on the radar. Bloomberg is definitely has us on their startup maps, and a number of the other research sort of more widely read research publications have definitely noted that we're working in this space and that we're making progress in this space. But as yet, we don't have analyst coverage.
Okay, but maybe will come up soon, hopefully. Okay, super. Then, that's also a question I wanted to ask. That is great. What is the box next to you with Li Metal? It does, I'm pretty sure, to your your right side.
This is our lithium storage container. So, for those who don't know, lithium metal's fairly reactive. It's able to react with all the components of the atmosphere. So when you produce it, you want to store it in a airtight container under argon, so it doesn't degrade over time. So this is a can into which you can pump in liquid lithium metal. Melts at about 180 degrees centigrade. Then you freeze it in this, and when you want to use it again, you melt it out.
Yeah, exactly. Yeah, because when it burns, right?
And when it burns, it burns. That's a situation one wants to avoid.
Yeah, absolutely. Then also from the same investor, another question. When will the concept study you just published today with Hedge will be ready? What do you think, how long they need?
It should be ready before the end of the year.
Okay, super. And also in addition to that, that concept study, I mean, we are talking now about real commercial production. Would this be something for, let's say, Rochester or Toronto? Or is it like for the whole production process?
It's for the whole production process. This would be a standalone commercial plant. One of the things that's interesting about lithium metal, especially for people coming from the resource space, is you kind of have to adjust your thinking around scale. There's less than 7,000 tons per year of lithium metal produced, and so a commercial plant is it's small compared to other metals industries, and so it's when you think about developing a commercial plant like this. Of course, there are challenges with developing any plant, but it's a much smaller scale. It's not the types of time scales or permitting scales that you would expect with a smelter or a mine. It's a different beast. It's more like a manufacturing facility than it is like a metals facility. So one of the goals of the scoping study is really to define the requirements for the site, and then we can start to identify the site, whether it's a brownfield site or a new building. That will be one of the things that it looks at. But generally speaking, the idea is this will define those requirements, and then of course you can't do the engineering until but you can't do as much of the engineering for a commercial plant until you have the site defined.
Absolutely. And that would mean that you then know also what capex you need, for example, to build the whole thing for a certain amount of production, right?
Exactly.
Would it be modular?
So actually, one of the things that's really good about the process we're developing is, and maybe if Johan, you could put the slides back up, I can just maybe talk people through that, because it's a point I don't always make.
Okay.
So, and actually, I used to have a better picture, but maybe if you could just move the window out of the bottom left.
Coming, just a second. So.
Okay, so apologies, this is a bit of a small photo, but you can see here there's a large sort of rectangular box. So that's a box where the electrolyzer sits inside that. It's a temperature controlled box.
Which photo is that?
So in the lower here, maybe I can.
I'm just doing that. Yeah, exactly. I just wanted to do that. Yeah. So you can draw inside.
Yeah, I should be able to. Okay, let me.
Just use the cursor and then do it. Okay. Yeah, exactly. Here we are.
You see this box here? That's actually it's a temperature controlled box. It's I'm not going to say it's the size. It's the size of several refrigerators, but it's not an enormous thing. So one electrolyzer fits in there. Right now we're running with a slightly smaller than full scale electrolyzer just because it's easier to work with. But basically, that box is one unit of production. If you want, let's say this is on the order of 10 tons per annum of production. If you want 50 tons, you put 5 boxes. That's really what it is. So once you have one unit piloted, once you have one unit proven, and the economic characteristics are there, the availability is there, it's very easy now to scale up, to add capacity, or first of all to scale up and then to add capacity. You just put these in trains, several units, and that gives you a certain scalable unit. So we're very excited about that, because and that's why I keep emphasizing, it's an exciting time for us, because we know that once we get to this point, it's relatively easy to go from that forward to a commercial plant.
Okay, and how many square meters could such a box produce then?
So you could potentially produce around 10 tons per annum of lithium out of that scale.
Of one box?
Yes.
Super. Okay, that puts my next question already up. Hang on, just let me get rid of that. What would that mean in dollars? I mean, where do you see approximately production costs per ton? What could be a selling price? I know it's a forward-looking statement, but to give us an idea, are we talking about a gross margin of 30%, 50%, 70%?
Yeah, so it really depends on what the input costs are. I mean, most of the cost of lithium metal production is actually the input material cost. So, when we started, just to put things into perspective, when we started, lithium metal was about $90 a kilogram. It's 450 plus today. And most of that is or a large chunk of that is associated with the cost of lithium units. So to talk about margins is a bit, it's difficult because of course it's so dependent on the general lithium price. But look, I'll answer the question in a circuitous way, but basically by eliminating a lot of the difficulties in working with chlorine gas, you eliminate a lot of the ongoing maintenance and a lot of the upfront capex costs of a lithium metal facility. So we think we can achieve similar costs at a smaller scale than the conventional process, and conversely lower costs at a larger scale. So it's I think the process, if you look at a process plant based on our system versus the conventional one, it's a lot simpler. There's a lot less unit operations there.
Okay, super. So where do you see the advantages of operating manufacturing facilities both in Canada and the US?
You mean as we currently, sorry, you mean as we're set up right now or in the future?
Yeah, now and in the future, of course. I mean,
Yeah,
you're in front of your market, of your customers, right?
Yeah, no, exactly. I mean, look, the most vibrant next generation battery ecosystem is in the US. So you have to have a presence in the US. At the same time, when you're talking about lithium metal production, which tends to be energy intensive, it's relatively look, what are people going to look at? They're going to look at cost, yes, and they're going to look at the environmental characteristics of the process. We have a big advantage. We get rid of the chlorine. There's no fugitive emissions. There's no brine or byproduct production that you have to deal with. So already we're ahead. But ultimately, energy input cost is a thing, and energy type is becoming much more important. There's a big difference between energy that's produced from hydroelectric sources in the eyes of consumers and in the eyes of our customers than there is from a coal-fired power plant. So we're obviously very sensitive to that, and there's a lot of jurisdictions in North America where it's very favorable to site a lithium metal production facility, both because of both of those reasons. So and there's sites both here in Canada and across the border in the US.
Could you imagine to let's say make a step outside the American continent to Europe, because we are seeing now more and more gigafactories be built.
Yes.
Yeah, also due to Tesla in Brandenburg and Grünheide, for example. Yeah, but we know also BMW, Volkswagen is building, planning, of course. So could that be for you also?
For sure. Yes, for sure. It's not an area where we're very active right now, although we do certainly have some contacts there with groups working in Europe. Our focus for the moment is in North America, mostly because of this robust next generation battery ecosystem, and because of the metal demand as well. But it's a natural step. These technologies are, the anode technology solves a general problem, the problem of cost of metallic lithium anode materials, and producing those materials at scale. The lithium metal process is really made for more restrictive and more discerning jurisdictions. It's perfect for those because you eliminate so many of the environmental impacts of traditional lithium metal production. So definitely, what applies in North America applies almost doubly so in Europe because of that.
Okay, super. Let's talk shortly about money, because I have questions here also on that. You stated in your presentation $21 million is still in cash, which looks to me very healthy. So how long would that last? Is it enough to finish the hedge study? And could you use some of the money, let's say, to really invest it into a commercialized plant now facility?
Yeah, so we've got a healthy runway. It takes us certainly for the well over the next 12 months, even with our fairly aggressive plans. In terms of investing into a commercial facility, that's a significant piece of capex. So we can make some of those investments, but we know we're going to need to raise money shortly thereafter. So we're being very judicious with the war chest at the moment, and that's why the focus is so much on getting the technologies to a commercially ready state, because of course that unlocks a broader range of opportunities to fund the next stage.
Definitely. Could it happen that you say you put in a strategic partner, or would you say that might limit your future customers?
It depends on the nature of the partner, right? It really does. And we're definitely looking at strategic partnerships. We're talking to a number of groups who could potentially become strategic partners. There's one of the things which I think, just speaking to your previous question, in general, is an area where we're now increasingly active, as you saw with the NGen funding, but we're chasing a lot more of the non-dilutive funding that's available specifically for advancing initiatives around domestic supply chains, and in particular battery supply chains. So there's opportunities there as well. But ideally, look, this is the key point for us is to advance the technology to the point where it's very easy to say, this is what the commercial plant looks like, this is its output, here are the customers. Right? That's where you really want to be.
Okay, super. We saw also in your presentation you have 11.8 million options at 36.6 cents as an average. Your stock price is above the 70 cents range. So what would be the maturity? Let's put it that way. And when do you think the options might hit the market? Because it would give you another $4.3 million, which is also nice.
Yeah, look, I think, I'm not sure to what extent I can comment on that, but it's I probably can't comment on that in any significant way.
Okay, good. Then what I'm also interested in is you have the patents pending. When do you think they will be granted? Then for how long they are normally granted? And let's put it that way, how well are you protected given the fact that I think your key success factor is a patented technology you are having, right? And I mean, we know all the world masters of copying sit in Asia, especially that nice country with 1.3 billion people. So what are you doing against that?
So the patent portfolio is growing, or the application, I guess the number of applications is constantly growing. We are constantly advancing the technology, and we're very judicious about it. Our chief scientist is also a former patent attorney, so very sophisticated in terms of IP strategy. There are a number of patents that we're trying to get through to grant. Just to keep in perspective, we're about to hit the 4th anniversary of our founding. Typically, to get patent, depending on the space, it can take 4, 5, 6 years. So the earlier patents are now starting to come to the point where they're sort of far enough in that pipeline where you can start to expect to see some grants. Obviously, we'll announce those as they're granted, because, as you say, it is an important part of our value is to protect that IP. But we're being very diligent about it. We're keenly aware of the fact that both patents and trade secrets are going to play a key role in our success. Especially around the metal part of the technology, it's it's very novel. There's not a lot of IP out there that would potentially give us difficulties. The battery space is more hotly contested, but even there, I believe we've got some strong applications going through the systems. And like I said, it's, to me, one of the big exciting things about the technology, especially on the anode side, is that there's such breadth in terms of what you can do with the technology platform that we have so much room there to maneuver and to protect things. So I'm very excited. It's why we're working on advanced material development today, as we're working to commercialize the first product, because we feel there's sort of a possible land grab to be had there, and that's why we're doing that.
Okay, so how do you secure your raw material that you can produce that lithium metal and the foil and all those kind of things? Because I read last week in a newsletter that we need 16 new lithium mines in the world by 2030 already, just to make sure we are fine with the supply. And I mean, then it looks to me like everybody is battling now for real physical supply, that they can really produce their stuff, right?
Yeah, and it is. It's definitely a concern, and it's definitely an area where we're working. To put it into perspective, there's let's say we were to build a 1,000 ton per annum commercial plant, hypothetically speaking. That's 5,000 tons of lithium carbonate equivalent unit. So that's a small fraction of the overall total production of lithium carbonate units. So from that perspective, in the early stages, and we are looking at lithium carbonate supply. It's relatively more difficult to secure offtake or to secure supply when you're still in the piloting phase, when the market is so hot for the material. But in absolute terms, the amount of material we're looking for is not that large, especially in the early days. So there's that aspect. The other aspect is, when you're starting to talk about anode materials, you see a lot of the automotive, like the battery and the auto manufacturers, starting to pick up or have these supply contracts. You can imagine that as they switch to a different anode technology, they'll continue to do the same. So I don't expect that in all cases we're going to have to go out and find the lithium ourselves. I think a lot of this is probably by the time we're into after 2025, I think we're going to have a lot of that already worked out, and a lot of that supply will be sort of associated with particular automotive groups or battery groups. So I think we're going to see that shake out throughout the next few years. But the key point, I guess, is we're not looking for that much, especially at the beginning. And two, there's a lot of interest alignment between the end consumer, and we're already seeing that play out through the supply chain.
Okay, super. Can we say that with your technology, it makes things easier to reach, let's say, standard batteries with, for example, 150 kilowatt hours, or even going to 200 kilowatt hours? Because my feeling is still, with the electric mobility, that the problem is the fear of reach, of mileage.
Yeah. So this is one of the things where and sorry, Ellen, for interrupting. This is like the main thrust of next generation batteries, and they really let you do that in two ways. One is you can fit more energy into a given weight and volume, which is important. But the subtler point is, if you're driving around with less batteries in your car, you actually don't need as many batteries. Like, again, to put it into perspective, you're talking about 100, in some cases close to 200 kilos of excess weight between a lithium-ion battery and a next-generation battery in a car. That's like two pretty big people sitting in your backseat all the time wherever you go. That's going to affect your range. It's going to affect your performance. It's going to affect all of those things. So
it's me and you, and I have the majority.
but you know what I mean. It's a big so it's a huge boon in terms of the amount that you can physically stick into the car, the amount of energy you can physically stick into the car. But it's also relaxing the requirement of carrying the extra weight. That means the structure can get smaller. That means the shocks can get smaller. It has a knock-on effect that's quite profound. And so it's a huge enabler of increased range. It's a huge enabler of increased performance. It's a prerequisite really for electric e-mobility. It's very difficult to make a practical eVTOL air taxi with lithium-ion batteries, without having next generation batteries. So it's you'll see that there will be, this always happens in engineering, when something kind of fundamentally changes as an underlying technology, lots of it's like scaffolding, everything gets built on top of it, like a foundation, everything gets built on top of it. So it's going to be very, very exciting.
Would that also mean with your technology that it would help that you can, let's say, charge faster with higher power? Because I've learned from several discussions that when you go, let's say, with 100 kilowatt or 350 kilowatts to the battery, the aging goes much, much faster, and it's losing faster, let's say, energy density, storage capacity, and all those kind of things. So you are helping with your technology too?
So you kind of have to draw a distinction between where our technology ends and where the battery technology begins. So a lot of that depends on the other half. We're sort of at the interface with the anode. A lot of that depends on the other part of the cell. There are things we can do on the anode that battery developers can't do in order to help with those goals. But a lot of it depends on the battery developers themselves. We're really an enabler. What we're doing is we're saying to the marketplace, look, in order for you to have a mass market next generation battery, you need low cost anodes. Here is a technology for producing low cost anodes. We can do some additional improvements to improve the performance, but ultimately a big chunk of that is coming from the battery. But many of these batteries, they're, if you look, I mean, you can look at the leading companies in next generation batteries, and they will have demonstrated charging times at 15 minutes to 80% or something like that. So it's definitely 100% on everybody's radar. Everybody realizes that people would like to have the ability to quickly regain range on their vehicle, and some of that is just gas station thinking. We all are used to putting a nozzle into our tank and squeezing the lever and then getting going in 10 minutes. I find the changes that has to happen in people's thinking is, yes, but you don't have a gas station in your car. With an electric vehicle, or in your house, with an electric vehicle, a lot of people will actually have the gas station in their house. You plug it in overnight, you can get a significant amount of your range back by doing that. In many cases, all of the range that you've used. So there will be a trade-off. It's a side point, but it's an important one.
Okay. Last question from my side. You are quite ESG positive because you are saving a lot of this chlorine gas. Do you have other savings, other, let's say, advantages, which are also very important for environment, for processing, etc.?
Yes, no, definitely. And again, this is perhaps not obvious, but with our deposition technology, you can use the absolute minimum amount of lithium that you need to in order to make the battery work on the anode side. And some technologies need a little bit more, some technologies need a little bit less, and that's where being able to customize it is so helpful. But what it means is that rather than sort of across the board putting in 40 microns of lithium, because that's what your rolling process can produce, we can put in 10, 15 or whatever. And that means that we put a lot less pressure on the lithium resource. We incur a lot less of the upstream environmental costs, whether that's in mining, whether that's in processing the lithium into metal. It means that as a complete product, we embed a lot less of the additional environmental cost, which is very helpful. It allows us to thrift on the resource. And people often ask me, oh, with these high lithium metal prices, what do you think about, what does that do for your market? And I say, to me, it helps me because I can put less lithium than other people can put. That means that the material cost only widens the gap between ourselves and let's say a foil anode.
Okay, super. When will you be really then in commercial production? What do you think could be a realistic chance? I know it's hypothetical.
Yeah, it's really hypothetical. I think in terms of commercial lithium metal production, could be sort of it's not going to be next year, but it won't necessarily follow too far thereafter. Similar on the anode production, and again, you kind of have to adjust your perspective. Commercial production for us is as soon as we can build a plant that's large enough that we can produce material and reliably sell it for a profit, right? So for us, commercial production potentially starts earlier than commercial production of next generation batteries because there's substantial qualification demand that needs to be met. So, if we build a single machine plant where we can charge a premium for this material available in wide format and in large enough quantities, that becomes for us a commercial product as an entry-level commercial product. So there's those two types of opportunities. Again, the anode production, we're actually also in the process now of completing some of those engineering studies for that. And so again, the target is as soon as possible, as soon as the product is ready, as soon as the demand is there, we're putting we want to build that plant because it's a commercial enterprise.
Fantastic, super. So let me double check here that I'm not missing anything. Yeah, that looks good. Also from my side, all questions are posed and answered, which is really important. Maciej, thank you very much. That was a great hour with you and really interesting, your company, I must say. And hope that we can talk soon. And I wish you all the best. And please get your baby into commercial production because I have a good feeling that this battery world needs your product desperately.
Definitely, and thanks a lot, Johan, for the time and moderating and asking the questions, and to everyone else, thanks as well for joining. I really appreciate you taking the time.
Super, thank you very much. Oh, hang on, there was one. Okay, thank you. Yeah, perfect. Yeah, ladies and gentlemen, that was our virtual roadshow with LI Metal. You heard it with the CEO, Maciej Jastrzebski. And I think it's a really interesting high-tech company within the lithium space. This is not a minor, that is for sure, but a patented awaiting a technology, making the world, I would say, a little bit better here and also the production easier and also more environmental friendly. The company has $21 million in the bank, which is definitely enough to get it to a commercial decision plant. And I think with a normal bank financing and also maybe some strategic partners, which I'm pretty sure are already lining up, this is a real interesting company. Check it out. Thanks for watching us. That was Jochen Steiger for you, moderating LI Metal Virtual Roadshow for Swiss Resource Capital AG. Thanks and bye-bye from Switzerland for today.